Consumer reporting agencies are notoriously invasive, and most people don't even know how much of their data is being tracked. And for those few that do know, they don't know to what extent and how it's being used against them. The big three credit bureaus, Equifax, Experian, and TransUnion, they form the backbone of consumer credit reporting in the United States. Each maintains detailed files on roughly 200 million adults, tracking loan balances, payment histories, credit card utilization, public records, and inquiries from lenders. Their reports influence whether someone qualifies for a mortgage, an auto loan, a credit card, or an apartment. While they operate independently and sometimes hold slightly different data, they're essentially interchangeable and function as a single construct that lenders rely on to assess risk. Their reach is pervasive because nearly every form of financial transaction eventually flows back into one of their databases. Errors in these files can take months to correct, and the errors are prevalent, with a reported 44% of consumers finding at least one error, according to a 2024 investigation by Consumer Reports and Work Money. The consequences of inaccurate reporting can also affect employment screenings, insurance pricing, and housing applications. The Big Three's invasiveness comes not just from collecting conspicuous personal details, but from quietly and covertly creating a targeted model of a person's life. FICO. Fair Isaac Corporation built the scoring model that became the standard measure of creditworthiness in the United States. FICO does not collect raw customer data directly from individuals. Instead, it processes the information captured by the credit bureaus and converts it into a 3-digit score that lenders use to make rapid decisions. The score weighs payment history, amounts owed, length of credit history, new credit, and credit mix. FICO's influence is massive. A score shift of just 20 points can change interest rates by thousands of dollars over the life of the loan. Because FICO scores affect mortgages, credit cards, auto financing, and many rental decisions, the model almost single-handedly decides the cost of borrowing for most Americans, even though the company itself never even speaks directly to the consumer. LexisNexis. LexisNexis Risk Solutions operates one of the most expansive non-credit data networks in the United States. It compiles public records, court filings, property records, professional licenses, address histories, vehicle registrations, and insurance claims into detailed profiles that are used by insurers, law enforcement, government agencies, and large corporations. Unlike the credit bureaus, LexisNexis reaches into areas of life that have nothing to do with borrowing money. And its blade cuts the consumer deep. Most people are unaware of what about them is being tracked and what about them is being shared. It even tracks driver behavior, including speeding, hard braking, and rapid acceleration. Auto and home insurers rely on its claims database, known as Clue, to determine premiums and eligibility. That's right, those amateurish drifting runs you did in the abandoned warehouse parking lot at 2 a.m., when you thought no one was watching? Yeah, that was being tracked. Your donuts are now a data point. Investigators use its tools to locate individuals or verify identities. It also gathers data from filings, registrations, and aggregated commercial sources. The depth of its visibility into legal, residential, and behavioral history makes it one of the most quiet, thoroughly invasive entities in the broker landscape. VantageScore Solutions. VantageScore was created jointly by the Big Three, Equifax, Experian, and TransUnion, as an alternative to FICO. It uses similar inputs, but applies different weightings and can generate robust scores for consumers with shorter credit histories, including those with only a few months of activity. This makes VantageScore particularly relevant for younger adults, recent immigrants, and people rebuilding credit. While FICO still dominates mortgage lending, VantageScore is widely used by credit card issuers, fintech apps, and free credit monitoring services. Its existence contributes to score and analysis bloat, as each scoring agency calculates slightly differently. The model itself does not collect new data, but instead provides yet another scoring model that influences credit offers, pre-approvals, and marketing lists, extending the reach of the bureau data it draws from. ChexSystems. ChexSystems specializes in consumer banking behavior rather than credit. It tracks checking and savings account history, including overdrafts, unpaid fees, suspected fraud, and involuntary account closures. Banks and credit unions consult ChexSystems before opening new accounts, and a negative record can result in denial of basic banking services for up to 5 years. For many consumers, this is the most impactful broker they've never heard of. Being flagged in ChexSystems can push individuals out of the traditional banking system entirely, forcing reliance on prepaid cards or check cashing services. And again, the data can contain errors. According to consumer attorneys, 1/3 of consumers find errors on their reports. Its data comes directly from financial institutions. And although consumers can request their report, the entries often relate to incidents long forgotten or disputed. Clue, the Comprehensive Loss Underwriting Exchange. Yeah, it sounds like the acronym for a bad bond villain. It's operated by LexisNexis and is the central database for property and auto insurance claims. When a homeowner files a water damage claim or a driver reports a fender bender, the incident is logged in the Clue and remains visible to insurers for up to 7 years. Insurers query Clue before issuing new policies, and prior claims can result in higher premiums or outright denial of coverage. Imagine your insurance company pairing Clue data with the LexisNexis data that captured you doing those donuts at 2 a.m. for a claim that you're filing. Yeah, there's probably going to be some impact to that. The database also tracks claims tied to a specific property, meaning a new homeowner can inherit the claim's history of previous occupants. That's right, you can be penalized for things that happened before you even acquired the property. This makes Clue uniquely invasive in real estate transactions, where a buyer's insurance options may be shaped by events that occurred before they ever even owned the property. CoreLogic. CoreLogic holds one of the largest property and real estate data repositories in the world. It tracks ownership records, mortgage liens, foreclosure histories, valuations, flood zones, and tenant screening data. Landlords use its tenant reports to evaluate rental applicants, drawing on eviction records, criminal history, and credit information. Mortgage lenders rely on its property analytics to assess collateral value. Insurance companies use its hazard modeling to set rates. CoreLogic is the overlap of housing, finance, and risk, and its tenant screening arm, in particular, has been criticized for lasting impact of eviction filings, which can appear in reports even when cases were dismissed. For renters and homeowners alike, CoreLogic quietly shapes access to housing in ways most never even know exists. Acxiom. Acxiom is one of the oldest and largest marketing data brokers, holding detailed profiles on hundreds of millions of consumers worldwide. Its data covers demographics, housing composition, income estimates, shopping habits, interests, vehicle ownership, and lifestyle indicators. Brands and advertisers use Acxiom's profiles to segment audiences, personalize offers, and predict purchasing behavior. The company gathers information from public records, surveys, loyalty programs, warranty cards, and partnerships with thousands of data sources. Although Acxiom does not directly affect credit or insurance decisions, its influence on the advertising ecosystem is substantial. The profiles it builds can categorize individuals by health interests, political leanings, financial stress, or family status, raising ongoing concerns about how granular consumer targeting has become. Oracle Data Cloud. Oracle Data Cloud, originally built through acquisitions including BlueKai and DataLogix, aggregates consumer data from online and offline sources to power digital advertising at scale. It connects browsing behavior, purchase histories, app usage, and demographic attributes, enabling advertisers to reach precise audience segments across platforms. Although Oracle has scaled back parts of this business in recent years due to regulatory pressure, its data infrastructure helped define modern programmatic advertising, so the damage has already been done. The platform's invasiveness lies in its ability to link offline purchases to online identities. Yeah, you heard that right. It links offline purchases to online identities. It creates a continuous picture of consumer behavior that follows individuals across devices, websites, and transactions. For most users, the trade-off between convenience and visibility happens silently in the background during everyday browsing. Early warning services. Early Warning Services is owned by a consortium of the largest U.S. banks and operates fraud prevention, identity verification, and account screening systems used across the financial industry. It also runs Zelle, the peer-to-peer payment network. Its databases track suspected fraud, account misuse, and risk indicators across institutions, allowing banks to share information about potentially problematic customers. Like ChexSystems, a negative entry can affect the ability to open new accounts, but Early Warning's reach extends further into fraud analytics and identity infrastructure. Because it's jointly owned by major banks and integrated into core financial services, its decisions carry weight without much public visibility. For consumers, it represents one of the clearest examples of how financial institutions pool data to make access-affecting decisions. All of these companies act as a 500-pound gorilla sitting on the consumer's chest, hammer fisting them over and over again in the face. You can't see them. All you know is that you feel like you can't breathe, and sometimes you might hear a rib cracking under some unknown pressure. Maintain awareness by requesting a copy of your credit reports and challenging any inaccurate information. Good luck on your journey to reclaim your consumer power. And thanks for watching. I was trying to do a little baby, a little baby. All right, thanks. Good times.